and I said to Michael, it's not an inquisition.
Exactly. See it as a nice, you know what I mean? You're having a nice
conversation, not an
conversation, an introduction. I get it. Yes.
So let us start the questions with Michael. Who are you, and what's your business?
Okay, my name is Michael Bell, and I run MMB Financial Services. I'm a mortgage broker based in London, and I help people get mortgages. Doesn't matter where they live, I can get them a mortgage because all I need these days is a laptop, an email address, and a phone number, and I can do all of these things over the internet. So you don't have to meet me or see me. I don't have to come to your place. We can do it all online. But what I do generally is help people get mortgages.
Okay.
From all walks of life. Everybody from all walks of life.
Okay. So my first question is, prior to all this mortgage, where's your background, your education? Where, who is the person who we're speaking to?
Right. Okay. So mortgages is a second.
No, not the mortgages.
No,
the mortgage.
Yeah.
You know that day when you went into that place where the bell rang and they were.
I'm getting there. I'm getting there. Yeah. Right. So, career for me. I didn't grow up doing mortgages. I left school and became an engineer. Okay. So I left school at 16. And I was a service engineer for electronics. So basically, back in the late 70s, I was going around fixing people's televisions. You remember the rental companies?
Yeah. Yes.
Granada, DR, Vision Hire, Rumble. There you go. So I was the engineer that used to come and fix the TV. So that's my background for many, many years was in electronics.
Okay.
So and I had a career change back in 2000.
Okay, so before that now, can I just say that in terms of your schooling, where did you go to school? Where were you brought up?
Oh, you're going proper back now. Okay.
Yeah,
I'm from
where am I from? You know what I mean?
Right, okay.
London, Birmingham.
Yeah, I'm in London. I'm in South London.
Yeah.
Okay. I don't know if people know Streatham, Tulse Hill, Brixton. Yes. That's where I'm from, and I grew up in primarily Streatham, Tulse Hill area. Okay. I was actually born in North London, next to the Arsenal ground. Oh. Well, I say that, but it was hold up. I was born there. I was born there, not too far from Highbury, about 2 or 3 miles from Highbury. That's where I was born. Yes, but we moved to South London when I was about 5, so I had nothing to do with it whatsoever. So there you go.
So what team do you support then?
Oh man, you really want to go there?
Yeah.
Okay, Man United. You see, I knew your face was going to drop. You see.
I think, ladies and gentlemen, the interview has concluded. It's been wonderful to know you, Michael. I wish you well in all your endeavors. Good night.
As you can tell, I'm of a certain age, and I started following Man United when I was 10, when they won the European Cup. Now, little did I know that Manchester was up there. And I'm a London boy. I was only 10. I didn't realise. But because I got captivated by the team and they won, and that was my team. So once you have your team, what do? You stay with your team. Okay.
Exactly.
Now, if we're going to go into specifics now, where I live is about 3 miles from Crystal Palace ground. So I should be with the Eagles, but I'm not.
Yeah.
And I should be, because I was born near the Arsenal, I should be a Gooner, but I'm not. So
there you go. Right.
There you go.
Let's move swiftly on.
Away from the football.
Let's get back on track now.
Yes. Before we go, which team do you support? Because your face dropped when I said Man U.
The other team.
City.
No. It's always
Liverpool.
There you go. You see?
You don't come from Liverpool either. Anyway, let's move swiftly on.
Let's move swiftly on.
Before everyone thinks this is about football, it's not about football, everyone.
It's not about football. We are talking about business, but you know what? The joys of being in business are sometimes overweighed by all the other things that come about. But we have to celebrate what we do, because you wouldn't be doing it if you didn't enjoy doing it. Sometimes it's very difficult. Yeah. We all appreciate that. Yeah. But you know what? Let's have a laugh in between.
Exactly.
Yeah.
Of course.
Michael, as you were saying, where you came, which part you came from, your upbringing, so to speak.
Mm-hmm.
So you now Born
in Streatham.
in Streatham.
Yeah.
Yeah.
Grew up in Streatham.
Well, yeah, I grew up in Streatham. Yeah.
Grew up in
Okay,
Streatham.
okay. So now, where are you now in terms of you've left engineering and
Mm.
now you've become a financial advisor for
Yeah,
businesses?
because what happened was, I don't know, I got maybe done from the companies I was working for. I mean,
Okay.
I said the TV companies long before that. Also, after that, I worked for Xerox fixing photocopiers
Okay.
for
Okay.
many years. So that was along the same lines, electronics again, you know. But I got maybe done it from them. So then I saw an ad about becoming a mortgage broker, and it was a completely different thing. I knew nothing about mortgages, even though I
That's
had a
what-
house. I had a house, but I didn't know, the ins and outs of mortgages.
Right.
It was just a complete career change.
Mhm.
So I did that for a little while. Then I took an exam, qualified, and got my qualification to be a broker.
Okay.
So
And
how
there we
did
go.
you? Yeah. So how did you? So you've got your qualifications now. Did you go and work for a company before
I
deciding?
worked for a few estate agents before I went out on my own.
Okay.
I worked for a few estate agents, the in-house broker. You know, when you walk into estate agents, they always come and say to you, "Oh, have you got your mortgage in place?" And you say no, and they say, "Oh, come and speak to our broker." That
Right.
would be me.
Okay.
And after a few years of doing that, I decided to go out on my own.
Okay. Okay. So now you have your own business. How is that faring so far? Now you had bricks and mortars at one point, so you say, yeah?
So say that again.
You had bricks and mortar as a business, and you've moved on onto the internet. Is that correct?
Oh, well, when you mean, yes, I mean I had a premises. I mean it wasn't my premise. I was renting
Okay.
serviced offices, you
Okay.
know. So that's what happened there, and I moved out of those to get myself a shop. But
Right.
Okay.
So how did you? What made you decide to start your own business? Obviously, you've now got your qualifications for being a mortgage broker.
I've
So
in between, I've always had that entrepreneurial bent, put it that way.
Mhm.
Even when I left the service industry, I had a TV shop and a video shop, and I was fixing secondhand TVs, selling TVs, and then I had a film club with the videos came out in the 80s. I had a video shop, and so it's all along the same lines, business. I've always had that in my mind to have my own business. So I knew, even when I got into the financial game, but eventually I would start working for myself again.
right.
And
Okay.
so that was always my way,
Yeah. So you've always had that entrepreneurial spirit.
Yeah,
Not work for anybody else, but to do your own thing and to have your own.
Yes, exactly. I mean, it can be challenging. We all know that, and it's difficult at times, but it's more rewarding. You don't have anybody telling you what to do.
Yeah.
Mhm.
Yeah.
And if you make mistakes, you make your own mistakes, and you learn from them.
Yeah.
So it's the way I am. Yeah.
Okay. So now about the business that you now run, what is it? What's the service that you provide? And can you explain some of them to?
Okay, so basically, I am a mortgage broker. If you want to buy a house and you need to get the money to the finance to do it, you would come and see me. Now, I don't only get a mortgage for you. If you wish, I will also get you insurance to look after that mortgage. So if anything was to help, anything's happened to you and you pass away or your partner passed away, I'll get you insurance to cover the mortgage so that you can move forward. Yeah.
Okay.
So if there was a couple and they had a house together and one of the partners dies, the insurance will kick in and pay the mortgage off, so the other person can live freely. I'll do that. I can also obtain building and contents insurance as well.
Right.
I'll do that. And I have partners who look after wills and trust. When I say partners, I mean not partners as such, but people I can refer to.
Associates, collaborators.
Yeah, associates, and also with insurance, investments and pensions. That's not something I do, but I know someone who will.
Yeah.
So the connection is there.
Yeah.
I mean, in all honesty, what we're talking about here is while your specialism is the house,
Yeah,
you have other connections to protect the body as well. Yeah. So that makes
well, it doesn't protect the body; it protects your assets,
and everything else. Yes.
Yeah.
Okay. So let's talk about what's going on right now. The number one question is this a good time to buy or sell property? What's your experience on that?
Okay, right. So there is never one answer to this question, because everybody has their own idea of how they feel about property and how they feel about interest rates and how they feel about what their attitude to risk is. Everyone's different. Some people look at it and be ultra cautious and won't move or won't do anything until they're 100% sure. Some people are more speculative and will take a chance and do stuff. So there is never a good time or a bad time, because no matter what the situation in the economy is, there will always be people that will buy houses, and there will be people who will sell houses, and there will always be someone who needs to rent.
So would you say, you hear people say, you know, this is a buyer's market or this is a seller's market? Would you say that is a true statement to a certain degree, or not really?
It is, because there are always downturns in the economy, and a downturn will then favour investors maybe who have got the money to invest in property and maybe do a buy to let, and people who aren't quite on that scale would have to rent because they can't get a mortgage. So it favors one person. In a good economy, when interest rates are low, it helps people who maybe have challenges getting a mortgage. Interest rates become lower, the banks will open their purse strings more, and it gives people who are a bit more of a challenge a chance to get on a mortgage on a ladder.
Right. Okay. So in terms of that now, let's just say, or do you find it more difficult now for you to help people to find mortgages, or
it's because of what's happened in the last 2 or 3 weeks? You know, we've all seen that interest rates are going up because of the cost of living crisis. We've all heard about the gas rises, and all the bills are going to go up. The income tax is going to go up. National insurance is going to go up. All these things are going to be going up. So that's going to affect how much people might have left to spend on their bills, or to even pay the mortgage. So that's difficult. So yes, it's a time of worry, really, I'll say.
And so with that now, as your pool of
lenders
go to lending, has that started to shrink? Is that
well, there'll always be lenders out there. All that's happened is that lenders start to increase their interest rates in line with whatever happening in the market. Also, that's not the only way they can slow the market down. They can slow the market down by reducing the capacity for people to lend. So they'll have the affordability calculators set to a certain level, so that makes it difficult for you to borrow unless you've got a certain amount of income. They can play about with figures. So it makes it more difficult for you. They change their parameters. They can also change things like loan to value. Now, I don't know if you know, about a year ago.
Loan to value.
What's that? Loan to value.
Okay, right. So a loan to value is the difference between how much the property is worth and how much you're going to borrow. Okay. So about a year ago, maybe a bit more, you all heard about 95% mortgages.
Yeah.
Right. Yes. Right. So 95% mortgages means the lender will lend you 95% of the property price. You got to put up 5%. So in simple terms, how a house costs 100 grand, you can put in 5,000, and they will lend you 95,000. Okay. That was that way of doing things was gone for a very long time. You couldn't get it. You had to put down at least 10%. Then about a couple of years ago, maybe a year ago, they changed it back to 95%. So make it easier for people to get on the ladder. That sounds good in one way, because you only have to put a small amount up, but don't forget you're borrowing more as well. So it's it gets you onto the ladder, but you have to pull it, tighten your purse strings basically, and really try hard. Now, I think what's going to happen, I think that's going to change. The banks are going to change their criteria, and the 95% mortgages, they're still out there, but I've just got a feeling they may pull that, and then you'll have to put down 10% now. Also, not only that, they'll change their income multiples. So that what that means is they'll lend you more money or less money depending on your earnings. Okay,
Okay.
so
Right.
at the moment it's 4.5 times your earnings. So if you earn 50 grand, they'll give you 25,000. Yeah,
Right.
that's how it works. They multiply your earnings by 4.5 times.
Right.
Yeah,
Okay.
that's for most people. Professional, they'll sometimes go 5.5. It all depends on how much money you've got, basically. You
Okay.
know?
So here's a question.
Okay.
In essence, right. So in hearing that, my thoughts are: what about if you're buying to let yeah? Would that make a difference?
That is different. Yeah. First of all, you can't get 95% loan to value when you buy to let. When you buy to let, you have to put down a lot more money because
Okay.
it's an investment.
Right.
Okay, so say some lenders will give you 80% mortgages. In other words, you put down 20%, but most of them will give you 75% loan to value. In other words, they'll give you 75,000 if it's £100,000 house, and you put down 25%. Okay,
Yeah.
but the way they work it out and what they're going to give you doesn't correlate to your earnings. It's more about your rental income.
Yes. Yes.
Okay, so if your property can achieve, I don't know, £500 a week, they'll give you a certain amount. If your property will give you £1,000 a week rent, they'll give you another different amount. It all depends on what your rental income rather than your personal income.
Yes.
They do take it into account a little bit because there's going to be void periods when you haven't got a tenant moves out or whatever.
Yeah.
They want to know that even though there's no rent coming in, want to know that you've got a bit of money yourself to cover the mortgage if anyone should leave in between tenants.
Okay. All right. So I'm thinking, because I've seen a lot of things happening, and I'm thinking about multiple occupancies. So if you cover a a rent or whatever based on you've got a business proposition that you've got multiple occupancies. Let's say in somewhere like Islington,
Okay.
where the rental, the rent
high.
is very high. So if you have multiple occupancies, would does that help them to make their decision a little bit more? I'm only trying to help.
Yeah, are you talking about from the landlord's perspective or the tenant's perspective?
I think from the landlord's perspective, because we're talking about giving people the option. Yeah, I mean, as a tenant, all you need to do is find a place, and if you can afford it, you can. So that's the here and there. That's the simple equation. But as a person who, we're talking about mortgages and finances and so on.
A business.
Okay,
so if you're looking at it from a landlord point of view, I think what you're referring to is HMO properties.
Okay.
So you'll have a house and you buy the house, and when you first buy it may be a 3-bedroom semi or whatever, and over time you change it. You get the builders in and you extend this and stretch that and put, and make it bigger, and now you've got not 3 bedrooms, but you've got 5 bedrooms in there now. That becomes an HMO property, houses of multiple occupancy. Okay, so what will happen is you'll have one kitchen that they'll all share that kitchen, but they'll all have their own front door for each individual room. That is to the advantage of the landlord, because he's getting more bang for his buck, if you want to put it that way. He's got the same house that he was probably only have 3 bedrooms, but he's now got 5.
Okay.
And he can multiply the amount of money he's getting from it because he's getting more money from it.
More to him.
They are a good thing for people who want to take a chance on doing that. There used to be council used to make him get a license to do that, but not every council requires a license to do that. So it can be done. It's good. It's good.
Okay. All right. Thank you. I mean, that's information that we need. Now let's talk about. I'm going to put you in a scenario. Hello, Michael. We're new customers. We've got. Let's go for a little bit harder. We've got bad credit, but we've got enough money. Yes, so we've got money to pay without an issue for getting a mortgage. We've had bad credit. What's the process do you go through for that?
Okay. All right. So first of all, if you've got bad credit, the first thing I would ask for is your credit report.
Okay.
I need to see exactly what the bad credit entails, what it was. Was it just missed payments? Was it arrears on a mortgage? Was it arrears on a loan? Was it missed payments on a credit card? Was it a default? In other words, you didn't pay for a certain amount of weeks and a certain amount of months, and it comes to default. Was it even more? Was it worse than that? Was it a CCJ? You went to court, and they took to court to get the on a credit agreement. That's the CCJ. That's the worst one. Actually, it's not the worst one. The worst one would be bankruptcy. But all these scenarios can be catered for.
Okay.
There are lenders out there that will still lend you, even if you had CCJ on your file, but or a default on your file. Each lender will have their own criteria on what they're going to lend you. Because obviously, if you've got a CCJ or 3 or 4 CCJs and you haven't paid them, your interest rate's going to go up there.
Yeah.
If you're because the way the lenders see it is you're a bad risk.
Right now, here's a funny one, because through the life experiences I've met with many different circumstances. A person who has not got a credit card, doesn't owe anyone anything, but can't get a mortgage. What's the situation with that?
Okay, well that's I think that was a thing of the past. I mean, it probably still happen, but not so much now. What it is, the reason for that is because the lenders don't know who you are.
Yeah.
Okay. That's why they always say, if you want to get a mortgage eventually, get yourself a credit card. Not to go willy-nilly and spend it like mad, go mad with it, buy a car, just get a credit card, use it every month, pay it off every month. Have it for a year or two. That way the lenders, the powers to be can look at you and say, you are a good risk because you've had a loan. We know who you are.
Yeah.
We know that you're going to pay it back because you've shown that you're reliable. That's the thing. If they don't know you, you've never had a loan, it's a bit more difficult because they don't know who you are. So
you see that conversation is one in which I've always been confused about, because I'm saving my money. I'm not using credit cards. I buy what I need. I move on from what I need. And all of a sudden, I go out there to say, I want to get a mortgage. I've got enough money. To pay on a monthly. That's not an issue. Even to put a deposit down. But the question is, okay.
You don't know who you are.
You have got a history. So
that's a little bit of
it's a bit of anonymity, Well, I mean, it's the easy way around that. When you're gonna, if you've got no credit cards and you've never had a loan, just get yourself a credit card. Have it for 3 months, have it for 6 months, and use it. And then after you've built up a reputation of paying it back and not falling into fall into bad credit, and you show that you can pay it back, then they know who you are now. Okay, you've got a footprint. We know who you are. We know where you live. We know what kind of person you are.
The footprint
and that's it. Yeah, and the lenders are more take a risk. But if you're just Joe Bloggs and you've never had anything, they're not sure.
They're not.
And that's the reason. That's the reason for that.
Yeah. So thank you for answering that, because that's that puts it out there for everybody. My thing is right now in the climate that we're
scheme of things.
Okay.
Yeah.
People out there wanting to get a mortgage, or get on the property market. Okay. Worrying about the possible increases or the imminent increase again of interest rates. What kind of information would you say that they should look at first before, or where they should go even to gain more knowledge before taking that step?
Well, they're going to come see me. And I will tell them what to do. Okay, so you're worrying about whether you should get a mortgage or not, and what should happen. Okay, at this particular moment in time, there's a bit of uncertainty in the market and whatever. I will wait. I'll say to that person, wait to think to settle, because this new stuff that's coming out, the interest rate rises, the gas bills going up, the national insurance going up, all these things are happening just now. Give it a bit of time for it all to bed in, and so that you know where you are in, say, 6 months' time.
Right.
Because all those interests, because you don't know how much it's going to go up. You just know it's going to go up. You don't know if you're still going to have your job next week. So because businesses getting affected by these interest rises as well. There could be layoffs. You may not have your job, and even if you work for yourself, you may find it difficult because your clients may be dwindling, and
certain things.
Yeah. So I would say, if you're not sure, hang fire. Just to see what these changes in the economy is going to, where it all falls down, because it may settle down, and it will. Don't forget, we've got the war in Ukraine as well. That's affecting things in a big way. It's not just Brexit; it's that war, because that's causing gas prices to go up. Not just that, but other things in play, because the economy is interdependent on other things as well.
So there is not a time limit. It's literally for you to hold out and see exactly what is happening in order for you to move forward.
I mean, the time limit is what you put on your place on yourself, because again, like what I said in the beginning, is everyone's got a different attitude to what risk they're going to take. Some people are very thrifty and won't move until everything is completely settled. And some people say, okay, interest rates are going up now, but if I just grab it now, I can get a good one and I can fix it for 5 years. I'll do it now. Other people say, oh, I don't know what's going to happen next week, or I don't know what's going to happen next month, and won't move. And they'll maybe wait until, like I said, if you're the sort of person that worries and not too sure what to do, and if you don't have to move, hang fire, see where it all settles. If you're of a different mind and wouldn't take a bit more of a chance, and you really don't want to wait, then you could do it now and maybe get a good fix, a 2-year fix, or even a 3-year fix, or a 5-year fix, so that whatever you get now is going to be good for 3 years or 5 years, whichever.
I hear you.
And another thing, lenders are now bringing back 10-year fixes with a good rate as well.
Fixed rates.
Yeah, 10-year fixed rate. So basically, you go to the bank now, and they'll say, give you an interest rate of say 3%, and they'll fix it for 10 years. Okay, so that no matter what happens in the economy, your mortgage is going to be £1,000 a month for 10 years. Okay, so that makes you feel better. The slight downside to that is that if interest rates go down in those 10 years, you're not going to get that benefit. You're not going to get the benefit of the interest rate going down. Also, you're locked in for 10 years.
Yeah, exactly. Now,
okay, some people might think that's a good thing. You have to weigh it up, pros and cons.
Right. Okay.
So you're locked in for 10 years. If you want to come out of that 10-year fix, you're going to have to pay what they call early repayment charges. Because how the banks is they've given you the 10-year fix, so they want to make sure that they're going to get something back from that. So they want to get their interest rate, for 10 years. But if you take that away from them and say only have it for 5 years, they're not getting what they expected for you to stay there for 5 years and 10 years and give them their 10-year interest. So they'll charge you to come out of it. Come out of it. So there will be charges to pay, and that's on a scale. So the charges will be the highest if you come out early, and it'll be lowest as you go down the scale. So if you come out in 2 years, you have to pay back a big whopping early repayment charge. If you come out in 8 years, it's not going to be so high. And if you come out in 10 years, there's no charge at all, because you're giving them their 10 years interest. They're happy.
Okay. One of us, the audience has asked the question. I hope you don't mind. And they've asked, what do you recommend if a parent wishes to go into a joint mortgage with their children just to get a higher loan? That's good. That's what they call a if you look at my background there, you'll see JBSP mortgage. That's what that is. Joint borrower, single proprietor. Now what that means is your mum and dad will join on the mortgage with you and use their income to bolster or to add a bit more weight to what the income is, basically. So if the son or the daughter wants to borrow a certain amount of money on a certain income, but it doesn't quite stretch enough, they'll look at mum and dad's income and add that to the pot, to the mix as well,
to increase the amount of borrowing. Because remember I said at the beginning, they'll probably give you 4.5 times your wages. But if the youngster's only just come out of uni, he's only started working, he's only on 20 grand, say, but he can't afford it because his multiple then will only be 100 grand, 120,000. So that's not good enough for that. So they'll add mum and dad's mortgage, mum and dad's income as well. So mum and dad's income will go on top of that, and that will boost it. So mum and dad say,
is it for both parents? So if it's mum and dad,
it could be both, or it could be one. Depends on how much you need. Because if dad's got a surplus in his income and he wants to add that to Junior's mortgage, then they'll just take that.
Okay, but
it doesn't have to be mum and dad.
Okay, is that only the circumstances only for family, or?
Yeah, that's family. That is family. What because it's joint, but yeah, you can. There are other ways of increasing the amount of borrowing, or say, okay, so most lenders was only lend to two applicants, okay, husband and wife, boyfriend and girlfriend, whatever, yeah. But some lenders will lend to 4 people. So 4 people, friends maybe, or even family, could join together. You can have 4 applicants on the one mortgage. So you can add all their incomes together and do it that way.
Okay,
so go to the lender and say, well, we got 100 grand, we can want to borrow more. When you do that, though, I'll always say, if you're going to go down that road, make sure you get a lawyer in place, because if anything happens with the relationships of the 4 people and one wants to come out, it makes it more difficult for the 3 that are left, because they may not be able to afford it, and there may be some recompense somehow. So get lawyers involved in that to make sure that everything goes smoothly and you all know where you stand when you go into that. But it can be done. It can be done.
Okay, I mean, that is a very good way to speak to the community about purchasing property, because if we've always spoken about working as a collective, getting rid of your ego, and certifying what you're doing. And when we say that, we mean by getting the lawyers or whatever involved, so that you have a document, a contract that you can work on. Because people, this is how our cousins do their business. 4 families get together, get a mortgage, they then move on once everything has been sorted out, and they help each other that way until everyone has their own place.
That's a good way of doing it. You all join together and do it, and then when you're all a bit more settled and interest, and the property value has gone up a little bit, and your wages have gone up or whatever reason, then you move on. You can come out of it and leave the other 3 with theirs, and then you can move forward, because the property price is going to go up at some point. So the property value is going to go up. You could maybe remortgage it and buy that other person out. So there's all different ways of doing it.
Different ways of doing stuff.
Exactly.
Yeah, okay. So
I like that.
Yeah, so I mean, if anyone's out there thinking, well, how can I possibly, get on the property ladder, and they have children, that is one way. But obviously that comes with all sorts of different caveats.
Yes, it
you
does.
need to look into, and get an advisor to help you with that.
It is a way of doing things. It's not without its challenges, because we all know families can fall out, friends can fall out. It may not even be that one person may die. So and I'm just trying to show you all the different scenarios that could happen. So and that will fall upon the rest of them to continue paying a mortgage. So there's lots of things you can do to mitigate these things, but you have to be aware of all the different pitfalls and of what can happen.
So in essence, then at that point, if you identify yourselves and come to you and talk to you about what they need to do, that's when the information will be there for them to make an informed choice.
Exactly. I will show them how to do it, and I would find a lender who will accommodate them, because not all lenders do this. I mean, some do, but not all of them do it. So
it's a specialism. So
each lender's got their own specialisms, if you want to say that. But of what they offer.
I think I like the sound of that, because we don't necessarily think in that way as a collective. We've been a long time through the separations, so it's about, how do I survive?
Yeah.
And now we need to look at how do we survive.
Exactly.
Yeah, so
Exactly.
that is a
And
very
move
good way.
forward and build.
Yeah. That's not, you know what? That's not the only way we could do it as well. You know, people can get a gift from friends and family as well, just to add towards the deposit. So say you've got I don't know, you've got 25 grand yourself, but you need a bit more to get this particular property that you want, and the income multiples aren't quite working. You could go to, I don't know, friends and family, and they can give you some money. Usually that's family. I'll tell you the reason why, because the lender will want to know that it's not going to be given back.
Right.
It's not. It's a gift.
It's a gift, right?
Loan. It's a gift, and it's a gifted deposit. So they'd have to write a letter to the lender to say that this is a gift. I do not want it back. Basically, in fancy words, right? And I have no interest in the property or any interest in the property whatsoever. This is a gift for my son or my daughter or my grandson or my brother. It's usually family that's for. So
okay. So no, that's really good to know. And again, it's information that we perhaps a lot of us did not know, and that's why we say to you, get your pens and pad and pen ready, because this is information that if you're thinking, well, like, I'd love to get on the property market with my children, we want to move them forward in some way. The door's not closed. There is opportunities, and there are ways.
Yeah, there are ways. I mean, and also look at it this way. Don't forget, the most expensive part of the country to live in is London, for obvious reasons. But you could go far away from London and get property at a lower rate. Lower prices. Further away from London you get, the cheaper it gets. I'm not saying everybody should move from their family, but it is a way. I mean, even if you just move, say, 30 miles away from centre, so you can commute, but the house prices are going to be lower.
Yes.
Okay.
So that's another way of doing it.
So travel outside the M25 and have
exactly.
Yeah. Okay.
So, Michael, what other services do you cover? You talked about wills and you talked about insurances for those lovely mortgages that people might possibly be looking at in the next few months. So do you want to sort of let the people know what other areas you deal in?
Well, as I said, I mainly deal in mortgages.
Right.
Buy-to-let mortgages as well. If you're an investor and you want to make a bit of money, you're a speculator, you want to make a bit of money from
let's talk about that buy-to-let. From the investment point of view, how do you then circumnavigate that? That is a big one. So how do you
navigate that?
Work around that?
Well, actually, it's not as difficult as most people think. Again, the biggest hurdle is the deposit. You have to put a bigger deposit down to start that, bigger than what you'll do if it was a residential. Okay. So all you have to do is say, most 25%. So if the house is $100 grand, you have £25,000 to put into that. Okay. And that's all you need. Basically, find a property and put down the 25% and get a mortgage for the rest. Now, obviously, when you do that, you've got to make sure that you get a decent property. Okay. You've got to make sure that you can rent, because if you don't, if well and good you've got a property and it's got to be a place where people want properties. It's no good buying it out in the sticks when no one's living there.
No one's.
It's got to be, not necessarily. Nothing against the sticks, because so goodbye to the opportunities out of London. But all I'm saying is, it's got to be in an area where there's people who want to rent it. Not in a.
I mean, no specialism, one place, one house, in one area, nothing else. You are looking at how people commute, how they live, and all the other bits.
I mean, I would say if you go buy for that, you make sure you got people who want to rent that property. So you look towards maybe going places where there are universities, or if not universities, places where there's a town where there's a lot of employment there. People, workers are going to want to have to find somewhere to live. You go to a place where properties are not too expensive, so you can rent them out. If you can't manage it yourself, you got to look towards maybe going to managing agents, or find a place where the council will take it off your hands. If you wanted to let it out to council,
Yeah.
some council will manage the property for you and find you tenants as well, and
Yeah.
you never have a void period. So there are lots of different ways of doing things. It's just what your attitude is to risk and your attitude to doing certain things, you know.
Right. Okay. And do you think that as you know, as a race of people, that we should be sort of taking a little bit more risk or
we're risk averse.
Informed risk? Do you think, you know,
as a race of people, listen, there's more and more of our people doing more and more things. I don't think we're any more risk averse than we used to be.
Right.
I think we're moving forward. I think a lot more of us are doing business, as you can testify to yourself.
Yeah.
A lot of us are doing more business. We're becoming a bit more savvy.
Yeah.
It's taken us a little while, but we're getting there. And I find more and more people are taking this chance, especially the youngsters. They're looking to move now. They don't want to sit down and do nothing. They want to. They see other people doing things just as well or better than them, and they want a piece of the action.
Yeah.
Well, honestly, you can say that the young people now are very quick to, you know, take the bull by the horn.
Yeah,
because they're not afraid. You know, we I think of my generation, I would say that we were brought up to buy a property and stay there for life. Young people now, it's like, well, if we're going to buy a property, we're going to do something with it and move on.
What is
you know, don't forget our generation.
They flip it?
They're flipping, yeah. But you're going back to what you said about our generation.
Yeah.
We're the first ones. Our mum and dad came here. Our main priority is to set down roots.
Yeah.
Yeah. Get yourself a property, get yourself stable, look after your family. Youngsters now, they've got the bit of the root. We've given them that platform now. They can spring forward now.
Yes.
And don't forget, technology has changed immensely.
There's
more opportunity for them. If they want to do stuff, there's nothing to hold them back.
Yeah.
You know? Yeah. And also, we're doing stuff more for ourselves because we have to. Because the opportunities for us aren't as they should be. Let's put it that way.
Yes, yeah.
So we're beginning to realise that, you know, certain people aren't helping us. We've got to help ourselves.
Yeah.
And more of us are doing that. And if we stick together, we'll do it. And we make mutual opportunities for ourselves.
Yeah.
Have to.
No, of course, yeah, indeed. So coming back to yourself, Michael, how long have you had your business presently?
Well, I got my qualification back in 2003.
Okay.
So I've been qualified in this business a long time. I had a bit of time out when the 2008 crash came.
Oh yes, yeah.
That was a hard time for everybody, but I've been back in it now for another 3 years now.
Yeah.
So I came out for quite a while, so I've gone back into it again. So I've got experience from when it was good to when it got bad. bad, and now it's back again now. But we could be in a period of it going bad again, but I don't think it's going to be as bad as that. I think the lenders are a bit more aware of what can happen. They put more controls and regulation in place to not fall down that hole again.
Right. Okay.
You know that hole that we had in 2008 when everything went.
Yes.
I think they learned from that, and things that they put regulations in place to make sure it doesn't happen again.
Yeah. Okay. So for people, it's not lost if you want to get on that property market.
It can work, but
it can work. Yeah.
You have to get in touch with Michael.
And
have a conversation, and that from that point on, you will have the better direction. Michael, can I ask you? How is it for first-time buyers right now? Are we still in a process of supporting first-time buyers, and is there schemes for helping teachers and nurses and so on to buy?
Yeah, they still have those opportunities out there for teachers and nurses. Some lenders have special schemes for helping them. The NHS people, the public sector. So there are some lenders that specialise in doing that. So that help is still out there. Also, the Help to Buy scheme is now on its last leg. That's come to an end. Not quite, but it's nearly the end now. So people are looking towards shared ownership. That's another way of doing things. And I think there's
what does that entail? Sounds scary.
Yeah, shared ownership.
Well, basically, you only buy a percentage of the property. The landlord keeps the rest. In other words, okay, how it works is a property is worth £100,000, okay, and you only buy a part of that, so you may only buy 25% of that property, okay. So your mortgage is for 25% of that £100,000 house. You pay rent on the rest of it, a subsidised rent on the rest of the property, okay. So you only earn 25% of your flat, and the landlord owns the rest of it, okay, and you pay him a rent for that. As you move along in your career, or whatever your earnings go better, you can staircase. In other words, buy a portion more. So as you meet a partner maybe and they come in with you, or you've had a pay rise and your situation gets better, you can now buy the other 25%. So now you earn 50% and pay only 50% in rent, and that can go up to 100%. So as your situation changes, you could buy more and more of that share.
Okay.
And
the reason within that, sorry, Michael, as you say that there, as your situation improves, you can buy more and more of that share.
Yeah.
Is that legislated so that you can buy, or can the person who owns the rest say, no, we don't want you to?
No. They have to let you. It's ruled by the government. There are things in place to make sure that you do things the right way. It's legislated for. It's probably
if
governed.
You paid your 25%.
Yeah. It's a scheme that is run by the government. Yeah.
Right.
Yeah.
Okay, that is wonderful.
That is really such good information.
That's good, because the important thing was that what we try to do here is to just give people the information to make them, to go back to this interview, rewind, get to understand, and then call Michael to say, hey, we're talking about this. What about me? Because I think that, I'm listening to you speaking about shared, buying the property, sharing it amongst friends and so on, getting a contract together and so on. So a lot of people are thinking, well, where do I go? How do I move forward? Well, that's a way. If you have the right people in your life, don't just trust, because that's the one thing. Do not just trust. Formulate it into an agreement that you sign, a contract. And then that covers all the possibilities that could happen. Then you move forward with that.
Even if you're doing it with family.
That's right.
Even if you're doing it with family. I mean, more so if you're doing it with friends, but even with family as well, sit down with a lawyer and make sure that you all know how much you're putting in each, because it may not always be equal. It may not be, I've got 25k to put in and he's got 25k. Some people may have only a certain amount. So they put in their bit, and then they're only entitled to a certain amount when it sells. So if you put in 25% and it increases by whatever, and the profit, you get 25% of what you put in.
Exactly.
So but not everybody will put an equal share. It's better if they did, but not everyone can. So that's why it's always better to sit down with someone, a lawyer, and make sure you all know what you're doing, and everybody signs on the dotted line saying, this is what I'm doing and this is where I stand. And that's the best way forward.
Okay, all right. I think that is wonderful. I think so, Michael. For me now, the question that we always ask of you is, where you are now, where do you see yourself in 5 years, and what is your legacy?
Wow,
that's a big one, isn't it?
It's a big one, but you know what? It's about what you want to put in place to let everyone, you can share that, what you want to put in place. What's the next 5-year plan for you?
My 5-year plan is to continue working. I love what I do. I will continue doing it. I don't have any plans right now to retire. Luckily, this is the kind of job that I can do where it's not physical. I can sit down in front of a computer and I can talk to people. That's all I need to be able to do. As long as I can do that, I will continue doing what I can do. Okay. My legacy, I don't know what that's going to be. I don't know. Look after my family, look after the grandkids. That's my legacy. Look after them. Yeah.
So if you want to get in contact with Michael, you can do. You can see it is on the screen. Oh my gosh!
I'll move across to my. There you go. My phone number is right there.
Right, we'll call out your phone number because it might
Yeah.
be too small.
You've got
07.
everything in your background there.
Shall I do it or you want to do it?
No, you do it. It's your
Okay, right.
time.
So my number is 07399 656 080.
There you go.
My website is mmbfinancialservices.com.
Yeah.
My email address is michael@mmbfinancialservices.com. It's all very straightforward and simple.
Yep.
It's a bit long, but it's there.
Well, it's not as long as Black Business Recommendation. But you know what? We do what we do because that's how people can communicate with us. So I like that. I like the idea that as long as there's a Wi-Fi, you're in business.
we went to the Wi-Fi thing. Yeah, we found out that's not quite right. It's Michael at MMB Financial Services.
MMB Financial Services. Right, you see, there you go. We're going to do all of this live. That's fine. That is
okay.
Financial Services.
Yeah.
There you go. All right. Okay. So that's really good. There you go, everyone. I hope that's right.
Thank you very much.
Excellent. So if you want to get in contact with Michael, as you've heard, Michael is extremely knowledgeable in all things to do with mortgages and so on. I'm sure you may have all learnt something today in regards to that. We do have a couple of questions though, which I will put forward. We've got a couple of more minutes, if that's okay, Michael.
Yeah.
So somebody said, when
let's get serious.
Oh,
Michael, give us the telephone number again. Write it down and then.
Somebody's asked for the telephone. So one second, and I will put it in here as well, so that everybody can get that. Okay. So your contact number.
07399.
Right. Hold on a second. Contact number.
07399
656 080.
Right. 07399 656 080.
That's right.
Lovely. Wonderful.
Fantastic.
Okay, there you are, everyone. And that is contact number
for Michael.
Okay.
Don't ring me now. I'm too late. Ring me tomorrow morning.
Yeah. So in business hours, yeah. So you've got the 9 to 5. Yeah.
Okay.
Brilliant. Well, it has been a pleasure.
It's been a pleasure talking to you as well.
Okay, and I hope everyone got those details on there. Oh, lovely. That's excellent. They have indeed.
Did you have a question you were going to ask?
Oh, yes, I did. There was somebody that did have a question for you. So I'll put it up on the screen, actually. So when selling shared ownership, I hope they're saying, how does that work? I think we have to explain that, but if you don't mind explaining.
Right, yeah. So when you bought a share ownership and you want to sell it and move on, basically when you sell the property, you have to give back the share that you didn't buy. So you sell the property, you've made a profit. Say you've made 100 grand. The property's gone up by 100,000 in the time that you've been in there. When you'll get 25% of the profit. And the landlord will get the other 75% because you've only bought 25% of it. So you'll get 25% of the profit. The landlord gets the rest. I mean, to be honest, shared ownership more favors the landlord, but it does help people get on the ladder and give them somewhere to live because it's a cheap way to get yourself a property, but it can be fruitful.
Okay, all right.
It gives you a step on the ladder.
A step on the ladder.
Yeah.
Okay. That's really good. That is lovely. Thank you very much indeed, Michael.
You're welcome.
It has been a pleasure. And honestly, you've shared some, I like to call them nuggets of information. Because I think everyone takes it for granted that you know about all these things.
Yeah.
But sometimes you don't, and you just need somebody to explain who's there that, with all this can explain the different options and how you can do it. Because there's many people out here that are thinking, I'm working, I want to, at least if I'm going to work and give whoever my money. I might as well put it on something that I'm going to eventually have.
Yeah,
and it's
exactly.
nice that there are different ways that people can do
That's
that.
right. Yeah. Could I just say, if you go to my website, there's a section on there called Mortgage Facts that gives you more information about the different types of mortgages and explains it in a bit more detail. So you know what, because there are different types of mortgages, there are different types of rates, and all of that is on my website. So look out for that.
Amazing.
Yeah, and I can explain the rest of it when you come to see me or give me a call.
There you go.
Lovely.
That is wonderful. Thank you very much, Michael.
You're welcome. You're
Michael,
welcome.
how was that for you?
See?
Oh, that was fantastic. That was really great. It wasn't so bad. It was nice. It was good. Very good. Thank you very much for having me on your show. I have really enjoyed it. Thank you.
It's our absolute pleasure.
Thank you so much.
Thank you very much for sharing the information and your knowledge. So, it's a very good thing that you've done for everybody. Thank you.
Okay.
And keep it going.
Yes.
Lovely. Thank you very much, Michael.
Okay. You take care. See you. And well done for you and your website. It's fantastic. It's helping people do all kinds of things and getting the community together.
Yes.
Well done to you both.
Thank you so much.
Thank you. Anytime, give me a call and we'll have a conversation.
Okay, we will.
Take
care. Thank you. Bye, Lorraine. Take care. Bye.
Wow.
Well, that was
great news.
That's interesting because you know what? We're all there. We're all talking about where do we go from here. But I think one of the lessons I learned very early on in life is that those people with the money make those decisions at this point. This point is where things are not going so well. Many of us are making decisions because we don't have the information. So what we need to do is sit down for a moment, find the right people to have conversations with to see how we can move on.
Yeah.
And someone like Michael, who is invested in the business of mortgages and so on, financial, that's someone to talk to before you make decisions. Because in our own community, we have many people, many of our elders who have property and don't know what to do and literally haven't secured the property for when they pass away, right? And they have children who haven't understood the property market to ensure that they collectively take care of the property. So please go back through this interview and look at the points that Michael has made and try to see how you can help yourselves.
And contact him.
And contact him.
Okay? All right, on www.mmb.financialservices.com. All right?
Yeah? Okay.
And so moving forward, what do we have in store for everybody?
Well, we want you all on Good Friday at 8 o'clock to have a look at what we have in store for you. So we're going to give you a short advert.
Well, the advert will come in a minute as we come off, but we have a special guest that we interviewed, and we will be just sharing where you can see that at what time on Friday. Okay. So 8 o'clock on Friday. Let's Talk live stream is a very special one, and it will be live streamed to our YouTube channel as well. Okay, but for now, we hope you have a brilliant week.
Absolutely. I think she just stopped me in my flow, so I didn't know where to go.
And we'll see you. Have a blessed week, everybody, and we'll look forward to seeing you next week.
Stay tuned. Don't leave yet.
Don't go yet.
Watch the little advert that's created for you to watch. Take care. Bye-bye.